Hi, Mason, you're on mute.
Perfect way to start. So, hi, I'm Mason. I'm CEO of Elifinty. I'm an ex-banker with 15 years of banking experience. Elifinty is a fintech with purpose, and our mission at Elifinty is to help people improve their financial well-being and help institutions that support this sector become more efficient and effective. COVID-19 has changed the context of our discussion. As coexistence with pandemics becomes a global reality, how will financial service providers and their consumers be impacted? So in this Elifinty webinar, our speakers will explore the future of finance and what it means for people in the new world. And what a panel we have. So we have Jonathan Shawcross, who's a former banker with roles as head of tech and COO at some of the biggest banks in the UK. He's the MD of Go Beyond Partners, now helping banks innovate. Robert Kelly, CEO of the Association of British Credit Unions with over 300 credit union members and at the forefront of change for this sector. Sean Williams, Director of Policy and Innovation at Toynbee Hall, an architect for Request to Pay and a strong voice for change in this industry. Sarah Williams Gardner, one of the founding members of Starling Bank, now Head of Consumer Insights, Markets and Design at Fair for All. Jesse Griffiths, who's the CEO of Financial Innovation Lab and a keen advocate for change in the financial sector. What we're looking to achieve today is to encourage an open conversation on pandemics and the future of finance amongst industry leaders and the general public, and to enlighten the consumers on where the future of finance is heading. So before we get into it, I'd like to ask our speakers to just introduce themselves. So Sean, would you like to just go first and introduce yourself?
Hi, thanks, Mason. I'm Sean Williams. As Mason said, I work at the charity Toynbee Hall, based in the East End of London. And since 1884, Toynbee Hall has been trying to address the systemic barriers and causes of poverty and exclusion and inequality, not just in London, but in the country as a whole. And we think essentially about what are people's lived experience of an issue, what do people want to see done differently, and then how can we work together with those people and bring their voices into the places of power, whether that's government or designers of products and services, to create good change. Thanks.
Thanks, Sean. Jonathan, same question, if you'd like to introduce yourself.
Thank you, Mason, and good afternoon, everybody. My name is Jonathan Shawcross. I am Managing Director of the banking sector at Go Beyond Partners, and as Mason said right up front, I've done 20 years experience in the banking sector across two major organisations, RBS and Lloyds Banking Group, where I was involved in two of the biggest integrations and subsequent transformation programs seen in banking, and I was the COO of technology at Lloyds before I left there, which was very much focused on readying that organisation for digital. At Go Beyond Partners, I lead our banking sector. We are an organisation which focuses on customer journey-led transformation, helping our clients improve their own customers' experience, and my focus is entirely on banking, so very much in the space of today's subject. We are owned by an organisation called Webhelp Group, who are one of the world's largest outsourcers of customer experience management. So that's me. Thank you.
Thanks, Jonathan. And I guess Sarah, same question for you. An introduction, please.
Hi, yeah, good afternoon. And firstly, Mason, thank you very much for inviting me to join what's a very illustrious panel. I've been in the tech business now for more years than I'd care to remember, spending a lot of my time at IBM with innovation being at the fore and using tech for good. More latterly, I was one of the members of one of the challenger banks, bringing the power of fintech into the palm of people's hands to help them manage their money better. And moving on from that, and having joined Fair for All Finance, here I'm leading the work that we're doing with the consumers and the market insights to understand who our consumers are, what our consumers want, and the products that serve them. That the mission here at Fair for All is to do exactly that, which is to have an inclusive and affordable credit provision to increase people's savings so they can overcome income shocks. And my goodness, aren't we in a situation where an income shock is just of the highest degree is something that we're experiencing right now. And also to really look to have inclusive products in the overall financial services system.
Thank you. Thanks very much. And I guess, Robert, same question to you, and thank you for being here.
Yeah, thank you again for the invitation. Yeah, my name is Robert Kelly. I am the Chief Exec of the Association of British Credit Unions. We represent over 178 credit unions across the GB, and we're very focused on that member driven value proposition to support our member credit unions across the country and the journeys and the sustainability journeys that they are on at the moment, and in these tough times of the pandemic crisis. And for us, a big feature at the moment, just in terms of supporting our member credit unions and what they do to support their members, over 1.3 million members of credit unions across GB, who are being supported in their daily lives through financial resilience from their credit union services. So we're very keen to continue to support our member credit unions on that journey, and how they can transform their products and services and make sure that they are a real strong and robust and viable alternative to mainstream banking and financial services overall. So thank you again.
Yeah. Thanks. And Jesse, last but not least.
Hello everyone, it's great to be here. Thanks for the invitation. I'm Jesse Griffiths. I'm the CEO of the Finance Innovation Lab, which is an organisation aiming to fundamentally change the financial system so that it can better serve people and planet. And we do this by building the community and the connections and the power of those who really want to change the system, both inside and outside the system. I should also apologise, I have to leave a little bit before 4, so I'll miss the end of the discussion, but it's great to be here for the main part.
Thanks very much. So just going into the main topics, I think, first of all, just understanding the economic challenges with COVID. And I think what we are looking at is something that we haven't seen in our lifetimes. A challenge where people are losing jobs, which are challenging household finances. And we know that the government has shored up the economy. But as we come out of the lockdown and as we come out of the support that the government is putting in place, these challenges are going to increase. The economy, we know, shrunk by more than 2% in the first quarter. The expectation is that it's going to be a more severe downturn in the second quarter, ending in June. So just want to start with how we can understand what these challenges are for people and businesses in your views, in these extremes of the new norm that we face. So Sarah, in your view, what challenge do people face in this new norm, if you could elaborate?
It's a very big question. So let me sort of put that in the context of the area that we're working in, which is to increase the affordable credit market. Fair for All Finance, which has been given awarded some money from the dormant bank funds to use for good and to work with the affordable credit providers, is very much looking to make sure that we come out of this with affordable credit very much intact. There are, as I think Robert has alluded to, a large number of credit unions in the UK, 400 or so, and about a dozen of the community finance groups. So our aim is to come out of these with those intact. We've recently conducted some research which won't surprise you. We're looking, the consumers of this market are more vulnerable groups, and it won't surprise you to hear that we believe that there will be a considerable loss of jobs, and that this will put more pressure on those low earners, women, and the younger people being highly likely to be more severely impacted. So the work that we're doing here, and the new norm, if that's what we're referring to this as, and as we come out of this, will be to see that affordable credit market intact, and for people to be aware of it. I genuinely believe there isn't as high an awareness of this market. I'm also keen to see the development of appropriate products that are affordable and that are using technology to flex to what the consumers of these products are asking for, and therefore will slip into the normal financial product services. The ultimate for this, and where we would like to go to, is to have inclusive products available through all financial services situations, but that's going to take time. So the new norm, I think we've already seen people adapting to and using technology more. We've had to, we've seen contactless go up, with a contactless sort of amount going from 30 to 45 pounds. I think the acceptance of digital products, and therefore the provision of products in this marketplace that actually address that, will be something that we'll see as we go further forward, and building on those as we go further forward.
Thanks, Sarah. And Sean, you work very closely with policymakers and very closely with the community at Toynbee. How has the community been affected, and what challenges do you see?
Thanks, Mason. So the community has been affected in ways which, when I describe them, will make complete sense, and there's probably very little new that we can add at the moment to what we already understand about how people are being affected, but let's just go through the issues. So as Sarah said, there's been an income shock for many people. We're seeing roughly 20% of people across the UK struggling to pay bills, including rent. So immediately that tells us that, firstly, many families have had either a total or partial income shock, and it's an income loss. It's not something that can be recovered. That money will never ever be recovered. So it's a total shock, and it's a total loss. And we need to really bear that in mind as we think about solutions going forwards. And I think that's incredibly important when we think about the use of credit to tackle this problem for households in particular, and small businesses. We know that approximately 30% of households are plugging that income shock by using savings to get by. So those savings are being spent down, and that means that those savings aren't there for other shocks that come in the future. So either if unemployment or reduced working hours or reduced income is extended for a long period of time, that income will not be able to be made up by savings because they're already being used. We also know that if those savings are being used now, if there's some other kind of expenditure shock in the future, if the washing machine breaks down, if there's illness in the family, that money that was probably meant for those kinds of things, it's gone. So we need to think about that for the future. We've seen roughly 1 in 10 households spending more on a credit card or an overdraft to be able to plug those gaps. We're seeing that starting to come down, but only very slowly. So when we look at those issues, we can see that a significant portion of the UK has had an impact on its daily costs and its daily expenditure through the income shock, and therefore, as we go forward, we'll start to see debt problems rise. Now, we run the face-to-face debt advice service across London, seeing 20,000 debt clients a year from Toynbee Hall, and we've just started to see a slight increase in debt cases coming through the door and coming through the phones. And the concern about that is it's happening very quickly. We'd expected to see quite a time lag because of all of the forbearance issues, but we're just starting to see a very, very slight upturn in debt numbers. So that means that either people are being proactive, which is great, and they're reaching out early, or the income shock and the costs that they're having to cover are significant. And those kinds of costs are most likely to be around existing debt that they thought that they could continue servicing, but now can't. So credit cards, other kinds of loans, or for example, arrears to service providers. So we're watching that. issues that we're seeing across the income range will be things like the risk that people will stop paying into a pension or stop being able to save, and all of those have long-term consequences around future problems. And then just picking up on Sarah's point about who are we seeing affected, obviously low-income households, and particularly households where they're either dependent on cash in hand, gig economy, zero-hour contracts. All of those kinds of households are really struggling. We're obviously seeing a long-term impact likely for young people, where the chance of employment is pushed further away. However, they're probably not struggling so much at the moment financially, so that's a shock that will come in due course. Renters very much depends on the nature of their landlord, whether it's a large landlord or an individual landlord, and their approach to providing information and forbearance. So we need to watch out for housing costs. And then finally, because of the propensity that people coming from a BME background are more likely to be in those kinds of low-paid jobs, just because of the nature of our discrimination and kind of exclusion in this country, means that we will see disproportionate impact financially on Black and ethnic minority families, as well as the health impacts that we've seen. The final thing I just want to mention is that no recourse to public funds, which came up yesterday. If you were hearing the Prime Minister appearing before the committee, you'll have heard the concept of no recourse to public funds, and that is an issue which actually is very large in this country. Many families don't have recourse to ask the state for help, and those families often have very little documentation and often are excluded from financial products and services. So I just want to kind of mention the hidden minority of people that we really need to think about as well.
Wow, thank you, Sean. I think that was really good. I think, thinking about from an individual point of view and shifting towards the institutions that support this sector as well, just want to understand, Robert, calling you into this conversation is, from a credit union's perspective, what challenges do you see on the grounds in this new reality?
Yeah, I mean, I think a lot of what we've heard already cascades its way across the credit union sector as well. There are different credit unions serving different demographics who have been disproportionately affected by some of what Sarah and Shan have said. Credit unions in general terms operate in tight margins. They are there to try and deliver that financial resilience and those ethical products. And we've seen from our member the data that's came back that if credit unions don't lend the money that they hold in terms of those member savings, then it's a very difficult business model to sustain. And we're seeing lending demand at less than 35% of what it would normally be against forecast and against this time of year. So that's having an impact in terms of the longer term income lines for credit unions. They are very dependent on unsecured lending by and large. And again, that key dependency has been impacted. We recognise for people at the moment that additional borrowing is potentially not the right solution, and we completely understand that point and how they make the choices that are in front of them. We're seeing in lots of cases an influx of additional savings where people can manage it, and I think where they're not spending on certain items, that they're trying to create that savings buffer. So I wouldn't necessarily see that as a challenge for those individuals, but for credit unions that are then not lending as much and generating those additional deposits, it does put pressure on the institutional compliance ratios, etc. So we're certainly we're seeing some impact at that level. I think one of the biggest challenges is it's so difficult to comprehend the breadth and scale of this crisis and how long it will last. And and we've been talking to regulators and legislators about this very question, that it's unlikely to be even in 2020 that we'll know the full impact of the COVID crisis. And I think it then it fluctuates into the years ahead, and how you then try and plan and build those transformation agendas. What impact might it have to existing business plans? On the flip side, and in a positive way, we're seeing lots of great examples from credit unions where they've responded to those challenges. They've created particular products to help members across the country. They've instigated some well-being examples to make sure that they're reaching out and trying to help those most vulnerable. So I mean, it's similar to what's been, what both Sarah and Shan have said already. That disproportionate impact on a sector where margins are very tight already, and the uncertainty around planning, understanding the full impact on numbers, and and where it leads to in terms of personal finances will demand for lending get anywhere close, and is that the right thing in terms of providing responsible credit? So I think we generally, the credit union sector is very resilient, and we are looking at supporting that as best as possible. But there is a risk that because of the narrow range of products and services that most have at the moment, that there could be a disproportionate impact on their their continued operations, and we're doing as best we can to support that at the moment.
Yeah, no, thank you, Robert. And I think, Jonathan, same kind of question from a bank's perspective. I think banks are going to be challenged in this environment as well. I mean, there was a news out this morning that HSBC is looking to cut 35,000 jobs across Europe. What is the impact on banks through this?
Yeah, well, we've obviously heard an awful lot about I guess in terms of banking, but the context there from the three speakers so far, and clearly, the prime concern that we should all be very concerned about is people and individuals and livelihoods. There is a very significant impact on the banks. Interestingly enough, 2008 as our last the global financial crisis, as was, the banks were very much the villains of the piece, and the governments were supporting them. I think this is an interesting scenario, which is perhaps in the reverse, where it is the government who have had to step in, are supporting the economy as best they can at the moment, but as they step away, clearly the banks will have a very significant role to play, as they have done throughout the crisis, but in stepping in and providing that support. And that will be, again, as indicated by a number of my colleagues on this panel, that will be for the long term as opposed to the short term. So there will be a very significant focus on what they are doing to step up. I think in many ways it will probably heighten some of the focuses that were already on the sector, actually. So regulatory and government pressure, which has been on the banks really for the last 10 plus years since the financial crisis, I think will only increase, and they will be, I think, rightly forced to play their role, whether it be the level of lending, the level of foreclosure, etc. I think there'll be a very sharp focus on that. Again, as you've seen with the government already, in that attempt to try and somehow soften the seismic economic impact that they will try and mitigate through such measures. But I think there will be issues that they will need to deal with, obviously, as major employers as well. So you touch on the HSBC example there. I don't think they will be the only ones. So during the first quarter of this year, the first quarter results, the Big Four in the UK set aside £13 billion in provisions. They were already on very aggressive cost and efficiency and digitisation roadmaps. I think that will only continue and accelerate. And I think they're going to need to fundamentally think about the way they set themselves up and work. So, remote working, which is, here we all are on a remote event that perhaps in one point we might have all been together. It's one of the phenomena probably to come out of this. Now, the banks are some of the biggest employers. I think they, along with many others, will be looking at how all of that affects them and their people. But I think, unfortunately, again, back to the HSBC example, I think it will be an impact that will hit people and cause, unfortunately, a number of an exacerbation of the issues that have already been highlighted. So no doubt the banks will find themselves right in the middle of it all again, as both people who are key to supporting and helping the recovery, but also perhaps villains of the piece as well in terms of some of the economic impact they'll have to deal with.
Yeah, no, thank you. And Jesse, just thinking about what the effect is on the future of finance and what is the scale of the impact, because of course this also means innovation budgets will be cut, etc., etc. What do you feel is going to be the scale of the challenges and the impact.
Thank you. Yeah, well, I think from the perspective of people like me who want to see big change to the financial system, I think the main thing to focus on now is to think big. So this is a huge crisis, as people have said, but it is also a very large opportunity to fundamentally change the system, and that could be for the better or for the worse. And so I think mobilizing ourselves to make sure the change that results is for the better is extremely important. And I think there's 2 points to make, really. One is obviously it's hard to overestimate the size of this problem. So this is the biggest economic depression in hundreds of years, and a huge change for the financial system itself, probably much bigger than the global financial crisis when we get to the end of this. That's both through the impact on the real economy, as people have mentioned, but also because that impact is likely to have significant impacts on asset prices and other things, which will lead into impacts on the financial sector itself. And so there is potential for a financial crisis to emerge out of this health crisis. I mean, I always think of it, at the moment we're in the middle of a health crisis, and the economic crisis will come to dominate thinking in the months and years ahead. And the question then is whether that will also trigger a financial crisis. And the second point to think about is also the scale of the government response is unprecedented. And as we know, the financial sector, as people have said, has become a major part of that response, used to channel billions to struggling businesses, both large and small. And all of this, I think, shows really the scale of change that is achievable when society, if you like, is clear on the purpose. So the question, I think, the main question for us now is, can we use this, the fact that the change is so dramatic and large scale, and we've all been woken up to the fact to what we really value most, can we use that to dramatically shift the financial system so that it puts purpose at its heart in the future?
Mason, you're on mute. Sorry.
Yeah, thank you. Thanks, Jesse. What you're saying absolutely resounds with us as well. And in our experience as well, challenges can bring about amazing opportunities. And I think this huge challenge presents a huge opportunity as well. And I think that's where we want to drive this discussion with this group is, what innovations are on the horizon, and how will financial well-being be managed by banks and regulators in the face of the cycles of economic downturns and bounce backs, etc. So coming to you, Sean, first, you worked with Request to Pay, which is a fantastic product, and you're changing and helping to bring control in the hands of individuals through this program. What do you see as the main innovations on the immediate horizon and beyond?
Thanks. So I think I'll start from where Jesse's taken us, because really importantly, this is an opportunity for the financial services sector to have a real rethink about who its partners are. And really, the financial services sector should see as its partners, its customers. So inclusive design, co-production, co-design, working hand in hand with the people that you want to sell your product to, I think is really where innovation should begin from. And why do I say that in the context of the pandemic? Essentially, financial services, if it wants to survive as an industry, needs to have the trust of people. Trust is a really big issue. Trust is important both in terms of, will I trust you as a business with my money? And also, will I trust you as a business with the future of my community, of my society, of this planet? And we've known that there's a growing and emerging realization, particularly amongst the younger generation, that the financial services ability to make good decisions about where money goes and how money is spent is really important for the survival of us as a race. And one of the things about the pandemic is it's making us more aware of global issues. and sustainability issues than we've ever been willing to really recognise. So ownership models are really important. So I'm one of the, we're part of an organisation that, along with many others, really would like to see regulation around what firms have to consider when they're making decisions to be changed by legislation. But where leading firms will be is ahead of regulation. So leading firms will say, we won't just prioritise return on profit or return on investment for our shareholders, we'll prioritise the community that we serve alongside that. So that's where the beginning of innovation needs to sit. And that's what we'll be looking for. We'll be looking to firms who are saying, we don't just care about making more money, we care about how we make that money and who benefits from it. So that's number one. And then thinking about the actual types of innovation that we're seeing and also hope to see that we think will be important in helping us all survive the pandemic as well as possible from an economic and financial perspective. So for those of us who are able to be in work, being able to draw down salary at a point that meets our needs so that we effectively can use our earned money rather than borrowed money at the point that we need it is really important. So having salary drawdown, flexible products, normally channeled through an employer, really important. Of course, employers find those really difficult, and so I'm part of the Money and Pension Service Challenge Group on using employers as a channel to help people improve their financial well-being. And one of the things that we can see is most employers have no idea, and why would they, about how do you partner with a big financial product like a salary drawdown option. So in a way, we have to think about not just what products are available, but also who needs to understand them to enable them to be reached to the right people. So educating employers and helping employers understand really technical issues around financial products is crucial. Alongside that, flexible savings products. So many of you will know already that there's a really good, important trial going on around kind of side jam jar product alongside pensions, so that we can start to help people who want to save into a pension but are nervous about it because they think they need a short-term pot of money to draw down more quickly, to be able to do both. And so understanding that people have different savings needs for short-term and long-term needs is really important, and being able to combine different savings products together to help people plan and also to be ready for the kind of income shock we've just seen is really important. So thinking about different packaging of products. So we're seeing some interesting work there. I'd also say that credit score is probably one of the most pernicious causes of wrong decision making. And so all of those individuals and startups and challengers who are thinking about how do we improve credit score? So how do we turn a credit score away from, are you the kind of person I want to lend to how would it be best to help you access credit that will meet your needs effectively, and also to reinterpret what affordability has been led to kind of understand. So affordability shouldn't be, can you afford to repay me? Affordability should be, what will it do to you and to your financial well-being if I do or don't lend to you? So those are really important issues. And the final thing I would say is that nationally we need to restructure. So we need to recognise that for some people, a grant is the right solution. For some people, a no interest loan that they can repay is the solution. And for other people, access to interest bearing or fee bearing affordable credit is the right solution. And at the moment, we don't have enough of those three things, and we need to put those in place. Because in a pandemic environment and the post-pandemic environment, many people will not be able to afford to repay current lending options, and yet they will need to borrow. So we really need to be innovating around good access to grants, no interest loans, and affordable credit.
Wow, a lot of good stuff in there. Thanks, Sean. And I know, Jesse, you have to be going, so we'll come to you first. And I think, you talked about the opportunities that lie ahead, and Sean expanded on that. Just from your perspective as well, what changes do you think the financial system needs to have to become more purposeful, and with the current climate that we're in?
Yes, I and thanks for letting me go so I can run away, and apologies again for having to do that. Yeah, I think that one very important framing which has been touched on is this build back better framing. So we're going to have to make enormous investments if we're going to get the economy back on track, and we need to use those to also meet our climate goals and to build a better society. So how do we make sure not just that we survive, but actually that we recover better? And that's in the context of us knowing that we've got basically 10 years to turn around the financial system so that it can finance the investments in green and renewable energy and stop financing fossil fuels that we need. And also, as many people have highlighted, just quite how much we need to change if we're going to make the financial system work for everybody and be resilient and accountable. So I think there's probably 3 categories of action we should be thinking about. The first is from the government, and I think there's no getting away from the fact that the government is going to be a huge player in all of this in the next few years, from the way they structure the central bank policies to, at the moment, you know, the recovery is loading up lots of businesses with debt, which would cause huge problems for the financial sector in the future unless that's turned to equity. We've talked about poverty and vulnerability and how those issues are getting much bigger as a result of this. But I think the second point is that there's a lot of change where, if you like, that the big beasts of the financial system will need to make if we're going to build back better. So some research shows that 33 global banks invested nearly $2 trillion in fossil fuel companies in the 4 years after the Paris climate agreement. And we know actually that we need to stop investment in fossil fuels virtually tomorrow if we're going to actually have a chance of keeping below 1.5 degrees. So there's a huge change in those institutions. But then I think also we need to find a way to marry this recovery with a rapid growth of purpose-driven financial institutions. So credit unions, mutuals, community-based groups, social purpose-driven financial institutions. And how can we create more space for those to operate? And part of that is about regulations and policy. And part of it is also about other things like, for example, the data revolution that's happening in finance, and how can that be used in a way that helps to shift the power dynamics that structure the industry. So I think there's a lot to do. It's very hard to know how this will unfold, but I guess my main thought is that we need to think big at this stage and think about how we can really emerge much better at the end of this, with a financial system that's much better suited for the planet, but also for the needs of everybody, including the poor and most vulnerable, and not just focused on trying to survive.
Well, thank you. And Robert, just bringing you into the conversation about credit unions and innovation, and thinking about how you're seeing over the next 12-18 months, credit unions should adapt or are adapting to innovations to address the changing market.
Yeah, of course. Thank you. And you know, and again, I think there's some linkage to what we've heard already in terms of some of those points. I mean, the bits that jump out in terms of that equity of service, the ethics, the value, purpose-driven finance, the trust element. I think those are all core components of what credit unions do every day, the relationships that they have with members, not only across GB in the UK, but across the world where they exist. And I think we could be accused of sometimes maybe taking that for granted, and maybe becoming complacent in the sense of not working hard enough to sell that story, to tell people more about why we exist, what value we generate, why we're different. So I think that's definitely an organisational sort of objective in these times, whether that's came to the fore in any more significant way. From an innovation perspective around whether that's technology, products and services, and maybe just the way that credit unions work and are governed, that I think one of the I can safely say there's not a huge amount of positives. There's many more negatives to the pandemic, but one of the positives which I think is obvious in this is that the impossible sometimes it's just not true, because we've had lots of credit union members, or member credit unions, sorry, up and down the country that have been reluctant to embrace transformation or technology changes. They've been hesitant or worried about what that means for members, whether they can afford it, how do they do that in a most effective way. But actually, because of the crisis, they've had to, in lots of cases, transform their business operations overnight, and they've done that successfully, and they've done it whilst in very testing circumstances. And I think, to me, that's shown that actually these goals are much more readily available, and they're not easy to manage, they're not easy to deliver, but they're achievable. And I think that sense of celebrating what we've done as a sector to try and make sure that products and services those are more accessible in these times, particularly where branches have had to close because of social distancing or just the general advice from government in terms of credit unions have been classified as an essential service. And I think we need to take that message very clearly coming out the other side of this and say, how do we transform our business operations? How do we make sure that our accessibility is really, really strong in the future? ABCO was engaged in a town hall consultation last year with members in the wider sector and other stakeholders, and we launched our Vision 2025 strategy in March at our AGM and conference, and a big part of that is about the legislative reform agenda that we need to continue to support our member credit unions. How do we innovate and those products and services more readily? How do we improve the customer member journey? How do we make more products more accessible using technology, and how do we then use that to the best of our advantage to generate a new generation of credit union members and widen the demographic appeal that we currently have? So I think there's lots to come, and I think products and services will be central to that. But let's not miss the fact that it's not just the technical bits that we take from this; it's the culture, it's the mindset change, it's the ability to see that the impossible is much closer to being possible, and if we use that and cultivate that as positively as we possibly can.
Yeah, thank you. Very good words. I mean, bringing Sarah into this conversation, I know you mentioned when we were talking about the challenges that one of the challenges you're looking at is making sure you're financing organizations to support them beyond this crisis. And I guess question for Fair for All would be, has been at the forefront of funding some of these projects. What do you see on the horizon?
Well, I mean, firstly, just coming off the back of what Robert was saying, let's see the positives in this market. The credit unions and CDFIs, through no fault of themselves or anybody, found themselves in a position where they had to transform their business virtually overnight. This is an industry that typically works very closely with their customers. It has a high prevalence of face-to-face and branch networks, and all of those things were prohibited literally overnight, so they have had to adjust. And as Robert's saying, let's see the positive from that. This is an industry that had been possibly slower to take on some of the new innovations that are out there, possibly hesitant. So what we have seen through some of the work that we've done, through the pilot schemes that we ran and started back in the summer, and the COVID resilience fund that we had for application and subsequently have given grants in the last few weeks, what we have seen is a desire to really embrace the technology and to use that for the good of the consumer. And I think, just going back to one of the things that Sean mentioned, and it's been mentioned by other people here, this is about designing products with the end users in mind, allowing those end users to actually drive the decisions. One of the things that I was quite instrumental in when I was in the fintech world was something called the gambling block. Now, that gambling block came about not because we were a phenomenally thoughtful or sort of organization, but we opened ourselves up to our customers. We listened to our customers, and we listened to what our customers were asking for, And in co-design, we went to researchers, we went to different organisations to validate what we were hearing from the customers, and we came out with products that made it much easier, put the humility back in the hand of the customer to control an addiction that they wanted to control, but in other circumstances was very, very difficult to do. So I think the co-design, the inclusive design, and I think going forward, the most important thing out of all of this is an ecosystem where we start to see people working more closely together. You know, Sian raised the matter of credit scores. You know, this is something where there is a vast amount of opportunity to improve it. There are some fantastic fintech products out there that when we all start to truly embrace the open banking world, and I don't think we've really touched on that yet, but when we start to embrace open banking and the consumers have the total confidence that they are in control of their data and this is not being used for any other reasons or benefits. This isn't the upsell, cross-sell, mis-sell that the financial services organisations and systems have been known for in the past. This is using things for the customer's benefit. So I think, you know, when we look at the projects that are out there, there are some really exciting things. This is an industry which really is close to its consumer. It's very caring about its consumer. And although they haven't been able to deliver that face to face, there are some amazing stories about how these providers are still reaching out to their customers in these times of difficulty. And it might not just be around the products they've provided to them, but they know these people very, very well. And they're providing a lifeline to some people in these very difficult times that we find ourselves. So to your question, we're really proud to be at the forefront of being able to work with people like Robert and his members and CDFIs to see how we can ensure that these organisations come out of this strongly, that they're not only ready for the future but fit for the future, and that they continue to have the essence about them, which is that ability and desire to really work closely with their customers and help them. And to Sian's point, affordable credit is not always the answer for everybody, and we have to be mindful that it's not a panacea. But given that we are seeing, you know, we knew there were lots of vulnerable people before we went into this. People are drawing down from savings, the buffers, small buffers that they might have. And we've got 12 million people in this country who have less than £50 in savings. It doesn't take very long for that to be eroded. So I think, you know, we need to be really mindful of how we collaborate and how we work together and how we really build on the ecosystem to design these products going forward. Yeah, and I was just looking at some of the questions that we've sort of had in the chat, and I know you're going to come to some of these later, but you know, there is an allusion to, will innovation help us out of this crisis? And I think when it comes to credit scores and availability for credit, then yeah, I think there's quite a lot that can happen there. And as I said, the embracing and adoption of open banking has a huge amount that it can bring to the affordable credit market and beyond.
Well, thank you. I think just bringing Jonathan into the conversation and shifting it slightly towards the bank side. And we know banks spend a lot of money on technology and innovation, but they're not particularly well known for being purpose-driven or customer-focused. So just from your perspective, what do you think are some of the innovations that are coming out? And I guess just to follow up on that as well, what does open banking and open finance, all the challenges that the traditional banks are facing, what do you think they're hoping to do with these as well, with these uncertain times?
Okay. I mean, first of all, I should just say I think most of what's been said, I think, is very powerful, actually, particularly in terms of some of the macro forces that are affecting the market. Points about trust, about people focusing on global issues. You know, we would all realise, I think, banks as much as any, actually, that sort of the value-driven customers, consumers that are interacting with them and in our market now have fundamentally changed the way I think, the way that the banks think and the way they act. I think you will be unsurprised to hear I have a very strong view that the great power is in the market. And Sarah actually has spoken well there, and obviously experience in fintech. And I think the fintechs and the challenges have been one of the biggest impacts in terms of driving innovation in terms of the big organizations. Let's not forget that the last 10 years has largely been characterized by a huge growth in competition, primarily from small challengers and fintechs, but also by huge increases in regulation. And I think both have their place. So, you know, it may be, back to Jesse's example of, you know, 33 global banks investing in fossil fuels and billions of pounds. I think, you know, that's clearly not something we would all want in the longer term, but I think that has to be regulation led. Whilst those activities continue and whilst financing for those is available at rates and for returns, that is going to happen in an open market. So that would be an example where I think regulation would be powerful. But I think, to the innovation point, I think the innovation that we see in banking and that we will continue to see in banking is absolutely driven by competition, and also by those values-driven customers who, frankly, are demanding a different kind of service and a different experience from their banks. And let's be honest, as the generations flow through, that is only going to become a more and more powerful force for everything that's being discussed, and the reasons that are being discussed on this call. I think the further context of financial distress, which has obviously been mentioned a lot by a number of people on here, is a huge factor in this as well, and I think will only accelerate the need for the big banks to understand how they are helping deal with these very important issues and how they are innovating and being led, if you like, by many of the fintechs and the challengers to move into this space. I think in terms of specifics in the innovation space, you know, I think, and Sarah will be familiar with this from her previous life in a challenger, in a digital challenger. You know, financial coaching, whether it be or prompts, you know, or controls around gambling, as you mentioned, Sarah. But I think financial coaching, support tools, very much the tool offered, obviously, my organisation, I think will become more and more and more important, and will only accelerate. And I think you should expect all of the banks to be doing more and more in that space as the economic situation worsens. I saw a piece of research recently that, interestingly, 42% of people post the COVID crisis are worried about forces outside of their control impacting their finances. Now, that's fascinating in terms of people feeling less in control, and therefore I think banks and other financial services organisations will have to do things to help them understand and help give them more control over their money. I guess to areas away from that, I think you can only expect to see more fintech activity, more challenger activity. You've got challengers who are getting their act sorted out now, which are even the TSBs, the Virgin Moneys, the co-ops, who will all come again and will all force the big banks and will create an incredibly highly competitive environment. I think you can expect to see AI play a much bigger role, automation, smart automation in terms of both customer experience, personalization of services, which again you would expect against the context that I've given to be about doing good as well as selling stuff as it might have been used in the past. And I think that will become more balanced. To link into, to finish your question, you talked about open finance and open banking. That has been a very, very central part of, I think, what I've just described in terms of the market forces that are affecting banks. I think it drives very different behaviours. I think it has driven a huge focus on what is it that banks are offering that are unique. Do banks, if they do nothing, become utilities? Do they become payment mechanisms? Do they become back ends? Because actually there are a ton of people who are better at building sexy front ends, and I think that's largely true at the moment. But I think they're running very, very hard at the moment to keep up. I'd say they're just about doing it at the moment, and remember, they have more resources and more to throw at this problem than most of the people coming in and trying to disrupt the market. But I guess it's about how they choose to use that investment. Yeah, I think you could expect more consolidation, more collaborations. There's some really interesting stuff going on, where also big banks are trying to get away from their legacy platforms. So you see Lloyds have taken a big stake in Thought Machine, which could become a new platform for them. RBS tried Bow, that hasn't worked. They'll probably go another way, but they will all continue to, do you end up with, NatWest Starling or NatWest Monzo or something like that, do things like that happen that actually force a fundamental shift. And frankly, there are now probably too many players, and a number of them, I would say, and I won't name them, but just aren't good enough, frankly, and aren't well enough run to survive long term and to compete against either some of the big players who've got their act together, or with some of the innovators who really do have their act together and are giving them a bloody nose. So yeah, sorry, that's a long answer with a lot wrapped into it, but hopefully some perspective.
No, thank you very much. I think that was really helpful to understand, and I think one of the things with open banking, of course, it's creating a lot of opportunities for fintechs, and Elifinty is one of the ones that is benefiting from, in trying to provide financial well-being to individuals. We wanted to just shift the conversation into open finance, which is on the horizon, and I know some of the speakers talked about ethical use of data, and I just want to go into that a little bit more as well with some of the speakers. So Sarah, just talking to you, just addressing, from your experiences, etc. What is the reality? From an ethical use of data point of view, does it really make consumers' lives better? Open finance, it's on the horizon. Will it impact consumers? How will it impact? If you could just talk through that.
I mean, firstly, I have to say, will it make consumers' life better? I have to say yes. I'm a firm believer in this. Having been a founding member of a challenger bank, which has done exactly this, which is to bring the availability of customers' data to them for their good. Yes, I believe that's got a lot further to run and much, much more to do. I sort of liken it to the introduction of a smartphone. And I think when we look at challengers and we look at fintechs and we look at the agile and speed that they bring products to market, it's like the smartphone 10 or so years ago. We've got all of this capability, but all of the apps aren't yet developed. So there's a whole load of things coming out, some phenomenal developments coming out, whether they be budgeting apps, whether they be advice apps, whether they be, and I'm just looking at the finance ones, whether they be linked to including rental data in credit scores, which right now doesn't exist, which is vastly unfair. Then there's a huge amount of benefit to be had by this, and I think to the point that Jonathan was making earlier, there are a lot of players now in the market. I don't know. I haven't got a crystal ball. I don't know what's going to happen, but the larger organisations have been able to, because of their deep pockets, be very fast followers. And I think what they have seen is they've seen the fintechs and the challenger players actually testing products in the market. So just going back to the gambling block, which Starling bought out and Monzo bought out very quickly soon after, we then saw this being brought out by the big four banks within sort of a 6 to 8, 9 month lag. So it's almost as though the challenges of the fintechs are sort of the Formula One, if you like, for financial products, and those things that they test and those things that they work are adopted into the larger financial providers. Whether we can continue to have that lag or not is a question mark. But I think ethical use of data is definitely a really good way forward. If we had had 10 weeks ago more access to people's, to the understanding of people's financial positions, whilst we saw the government respond in unprecedented ways and very quickly and making policy in timescales that we've never seen before, if they had been able to do that with consolidated financial data and access to anonymized data, then maybe they could have reacted either faster, slightly differently, more focused on certain areas. I don't have a crystal ball, but I just think that if they had more informed position, they could have done some things possibly a little bit more differently or a little bit faster with a basis of understanding. We'll only know in hindsight whether all of the decisions were right or wrong, but that's where I see, and Jonathan brought it in, whether it's AI, whether it's machine learning, there's a lot out there that can benefit the consumers. We now expect, well, some of us who've spent sort of the last 5-6 years in the fintech space, I expect everything to be instant. I expect it to be graphical. I expect it to warn me that I've got a bill that is due. I don't expect to be charged an overdraft. I expect to be told your balance is looking low. Please do something about it so you don't pay any overdraft. And I think that's what consumers are starting to expect now. And I think that's where we'll see the market going, and the ability to use data, as I said before, in a way that is not for the benefit of the financial institution, i.e. not to cross-sell, upsell or mis-sell, and use it purely for the users who will be able to give access to that data either in a short-term basis, a long-term basis. They'll always be asked if they want to reaffirm that they want their data to be used or accessed for whatever potential product that they might connect. Because this is the other thing in open banking. The banks won't be the answer for everything that the consumer uses. They will have a marketplace where other products will plug into their bank account. So putting the consumer actually at the heart of all of this, having the flexibility to change direct debits, the flexibility to move them a couple of days to help smooth their income and cash flow, I think is hugely advantageous to the consumer. And I think it's actually hugely advantageous to the financial institutions, because rather than having to go through debt recovery, if you have a little bit of flex there and you have trust, and this comes back to the point that Sean made very, very rightly earlier on, you have trust between the consumer and the provider. I think there's a huge amount of benefit that can be delivered by bringing all of these things together.
Thank you. I think that's very, very accurate and well said. Just bringing Sean into this conversation and just picking up on some of the conversation points around that. I know we make a lot of assumptions around people, and there was a mention of request for pay as well, which has been transformative in terms of giving back control. What are the ground realities? And I guess from an open banking, open finance perspective and the future perspective, what would your view be on this?
So again, I'm going to start with trust, because for many people, what I think we've really established as the case is that the idea of something being beneficial isn't enough to make most people actually use it. And, you know, we ran a test case where we could see in our financial education program, which is incredibly successful and transforms the way that people use and think about financial services and money, very rarely could help someone go from being someone who avoided transacting online to actually transacting online. And when we looked at it and we could see what was happening was that it's fine to tell someone about the benefits of a new product or service, but until they've used it, they won't believe it for themselves. They're very unlikely to believe it's safe. So we ran a trial where we worked with a control group who did the normal thing of just being told how to do something, and then a test case group who was shown with their own money and their own products to transact online. And surprise, surprise, the group who were enabled to actually kind of transact online in real life through the programme went on to carry on doing it. Those who'd only been described about it and shown what to do in theory just didn't do it. So we really need to kind of be real about people. There's nothing that's going to induce me to use a new product or service that I'm unfamiliar with unless someone I know tells me that they've tried it, it's safe, it's been really good, word of mouth, or someone shows me practically in real life how to use it and it turns out okay. So we've got to be able to do those two things when we're thinking about, you know, open data and open finance. In terms of what people want it to do for them, they want any financial product to do a few key things. So they want it to meet the purpose that they've gone to it for. So, for example, if they want to use a product because they want to keep money safe, well, then they want their money kept safe. They don't want any risk of it being defrauded or stolen or chipped away at by unexpected fees and charges. So safe, I want to leave my money in a safe place, look after it, do that thing for them. If they want to use a product because they want to get the maximum value out of their money, so we think of that as for £1 of money, you want to stretch that to get more than £1's value, as opposed to an unhelpful service or product that will actually chip away at that and reduce the value of your money. So if that's what I'm trying to do, and that goes across the entire income scale, then we really want the way the product works to help people save money on the things that they need to do, not just be offered discounts and kind of, you know, interesting shopping opportunities on things that they don't need and don't want. So well-designed, well-targeted, maximising value products, I think, are really important. And so, for example, you know, where open data comes in is around thinking, well, if a family or a household need to spend on essential bills and services, how can we really help that money go as far as possible? And so utility switch options, really, really helpful. Making sure that you're accessing the cheapest form of credit that you could possibly access. That's really, those kinds of tools are really helpful. So essentially, I want my money to be safe and I want my money to go as far as possible. If you offer me a product that does those two things, I'm much more likely to be interested. The final thing is, everyone wants their provider of any product or service to take responsibility when things go wrong. And one of the worst things that happens in the financial services sector is a firm refusing to honour the trust that the customer believes is between the two of them. And so, for example, in APP scams, we regularly see, even with the new code, firms telling customers, no, we don't think you behaved responsibly, and so we're not going to refund your life savings that essentially has been defrauded. And the receiving bank also refused to help, even though they opened a bank account for a fraudulent customer. So the financial services sector, including around open data and open finance, has to act responsibly. And that means all of those intermediary organisations that make open finance and open data work also need to be held to account. And being able to track who's had your data is an incredibly difficult thing. So where the regulator needs to come in is to make sure that it's never going to be possible for harm done to me as a customer because of using open finance and open data, for me not to be able to work out who's responsible, and also for them to be held to account.
Yeah, no, absolutely. Wow, fantastic. Just bringing Robert into the conversation, and, you know, what Sean was talking about in terms of, the need for having purpose, for the product to, for the product to be able to deliver purpose from a person's perspective. I guess credit unions have an important role there as well. And I guess my question is, how does open finance, open banking play a role within credit union space, and what's on the horizon there?
Yeah, again, I would strongly concur with everything that we've heard on this topic already from Shan and Sarah. I mean, we've already got lots of good examples of where open banking, open finance, better use of data is coming to the fore. Some of the work that was involved in the Affordable Credit Challenge Fund that the Treasury backed and that some credit unions have been successful in. There's a particular partnership with one of our larger members, Serve and Protect, working with Credit Kudos to work on a proposition that helps build that financial resilience and helps where maybe difficulties been shown in the past, that there's almost a coaching and a financial well-being and financial mentoring process to try and continue to improve circumstances and to get better rates and be more effective in terms of the products and services that are available. So there's many examples across our sector already. I think that will only improve and be much bigger in terms of its size and its scale and scope in the months ahead. The bit about ethical data, and I've long campaigned within the credit union sector that we need to understand more about the 1.35 million people that use credit unions in GB. Why are they attracted to it? We know a lot of the detail, but we don't necessarily use all the data that we have as consistently, as robustly, and as effectively as we should. And I think we shouldn't shy away from that ethical data objective. I believe firmly that ethical data and the use of that can create genuine benefits for the financial institution and the end user, the end consumer, the end member, as has already been mentioned. I think it would drive better product and service innovation. It would drive more flexibility. It would offer support to those individuals that need it most at different times in the month or the year. So I think there's a dual benefit, and I don't think we should be as reluctant to utilise the data that we have at our fingertips and to use that most effectively. I've campaigned for an ethical sales approach within the credit union sector, and I think sometimes we shy away from that because it looks as if we're trying to do that cross-selling. There's nothing wrong with ethical sales when it's deriving benefit and providing the products and services that people need most. I think we're also starting to see some introduction of those financial well-being and financial education toolkits, and it's been made very clear that there's no time like the present. There's no better time, more effective time than to make sure that those themes are covered in a more robust way and in a more effective way. So I think it should. We certainly see it as a purpose was one of the 4 themes that we created as part of our Vision 2025 strategy. And it's very clear that we need to do more on that, use the data more effectively, help credit unions build those approaches with members. And I think there's an undoubted dual benefit has already been mentioned. So I think we should encourage that wherever we can and use those case studies that are already out there and more to come that will continue to sell that story, because businesses and credit unions are no different. We'll look to each other for inspiration and to see what works and what doesn't work. And the more that we can showcase those really good examples and we can also show very clearly the benefit to the end user, the end customer and member, the better.
Oh, thank you. I'm just looking at the time, and I'm going to go into some of the questions, and there's some really good ones in there. So I'm just going to look at this first one, highest voted one, and this one comes for you, Jonathan, which says, Jonathan, do you see it as a good opportunity for banks to work more closely with credit unions to help connect people who are looking to borrow from a bank but don't reach the lending standards of the bank?
Yeah. So it is a great question. What I would point to is, I know that when I was at Lloyd's, I spent quite a bit of time actually working on this side of things. But we set up a specific relationship actually with the credit unions, which was exactly for this reason. So to avoid people, at the time it was kind of when the whole Wonga thing was blowing up and the inquiry there, we were very keen that people didn't go from a rejection from a big high street bank straight into the hands of the wrong people. So we'd actually built relationships with a number of credit unions that covered the regions of the UK, actually, to be able to point customers who were unsuccessful with borrowing requests, or we didn't have the appetite to do, into those credit unions. Robert may know probably a lot more than me actually on that subject as well. So, but that was my experience, and I think it's a great point, and I don't think we can do enough of that actually.
Yeah, absolutely. And I guess, Robert, same question, and maybe also from a programmatic point of view, is there anything that you might be thinking about?
Yeah, I would echo the points that Jonathan has mentioned, and we are very well aware, and we've had very close links with Lloyds over a number of years. They've supported the credit union sector in a very significant way for a lot of years now, and we see that on the ground. Like anything, I think it's been more successful in certain regions, and I think that's where champions within the either the credit union sector, those local credit unions, or then those bank branches are very aware of the partnership strategy and cultivate it and spend time developing those links. So it has been very successful. We would like to think that could be replicated and rolled out in a more in a bigger way across the country, and perhaps it's an opportunity for some other banks and other financial institutions to get involved in. And I think it's a really strong point. And I was struck by, I'm sure it was Sarah that mentioned it in relation to the banking system. I don't think there's any one financial institution that can say any more with any great accuracy that they can be everything to everyone at all times. And I do think that's really important, that there is people look at their financial purchasing behaviours and all those trends and how they interact with financial institutions, and it is very much multifaceted. People will use credit unions. They'll have a mainstream banking connection as well. They might have their mortgage with a building society. So there's potential for collaboration out there, and I wonder at times whether maybe there's a risk or there's wariness around whether it's competition, and you're introducing competition into the same types of people will strive to serve the same customers. But I think the reality is that there's plenty to demand to go around, hopefully, as we come out the other side of this crisis, and for the right sorts of products and services. So I would very much advocate, there's a strong relationship and strong track record already, and long may that continue. Let's hope we can do more in a more visible way.
Thank you. Next question comes from Vicky. Are customers exercising their rights to payment holidays and engaging with companies rather than cancelling? And have companies responded well to this ask from the regulator, both culturally and technically? Again, I guess this is more for banks. Jonathan, if you're...
Yeah, I can give a perspective on this. Again, I don't work for a bank or banks directly, so but what I do know is there is a particular Big Four bank who you would expect to take a large number of requests on payment holidays because of their business volumes. They went overnight from what they would typically see, which would be around 800 requests a day for a payment holiday, to 20,000 a day immediately after the announcement was made on payment holidays. Interestingly enough, they within a couple of days, because that is an impossible level of growth to handle, they actually created a bot, so an automated process whereby people could go directly to the website, request a payment holiday, and that was effected automatically. So from a standing start within a couple of days with an almost impossible mountain of requests. So I guess what I would conclude from that is they are a very good sample. Yes, that would suggest to me that people were absolutely taking up, and the banks, I think, and certainly in that case, stepped up very quickly to to make that possible. Whereas I do know there were other issues. I know one of the other big four again had publicly had quite big issues with being able to handle the requests, particularly on the commercial side for the bounce back loans and some of the other supports available. So I think they're in a much better place now, but that was probably a less great example.
Would anybody else like to comment on this? Okay, so the next question is from Ravi. He says, I think there is a strong case to deliver universal income to all citizens. On the one hand, with financial education and good financial behavior embedded in primary school education, combined with punitive taxes on gambling and high-cost lenders, as well as harsher punishments to unscrupulous lenders, is a good start. Do you think there is an appetite as far as policymakers are concerned? So I guess, Sean, I would pass this to you.
Thanks, Mason. I find myself kind of taking a deep breath before I answer, because I think there's two ways to interpret the question. So the way that I think the challenging way of interpreting the question is that we need to control behaviour, and that there's a kind of idealized good consumer, and that good consumer behaves in certain ways which are acceptable, and then there are other ways to behave which are unacceptable or unhelpful. And for example, gambling would be in that kind of punitive concept, an unhelpful behaviour. And the reason that I struggle a little bit with that kind of framing or interpretation of it is because we're complex beings, and at any given moment there are many things happening for us, and what something feels like inside and our motivations will be a particular set of logic to us, and they might appear very differently to the outsider. And so I'm not personally convinced that the combination of education, kind of fines and controlled behaviour, and punishing providers is necessarily the way to achieve good outcomes. I think it can restrict some harm in some cases, but I don't think that a very negative approach, which I interpret that kind of question in that negative way, leads to. So whilst some of those things I think have a role to play, I don't think they're the package I would put together for creating good financial outcomes. Universal basic income, yes, I think that has a role to play in creating a really kind of much improved financial well-being in this country. But I wouldn't necessarily link it to the kind of the gambling and high cost credit issues. Now, where I think that the need to provide limits on gambling, for example, and we've heard already in this call that there are some great tools, the gambling block on that's around giving a tool to someone who says, for some reason in this particular area of life, I struggle to regulate my own behaviour, and the tools I'm using make it too easy for my behaviour to remain unregulated when I can't do it for myself. And so having a tool that I can choose to switch on to help myself is really powerful. And that to me is an enabling tool. That is a tool that is about understanding people's needs, because we listen to them, we ask them what the problem is, we listen and we act on their feedback. We use tools and systems that we have anyway to create a solution for them, and then we put it into their hands and say, here, you use it when you need to. Picking up on the point around fining gambling companies, so where I think regulation does really come into play is that we should in no area of life enable a firm to cause harm. It is that simple. We wouldn't want it in food, we wouldn't want it in water, we wouldn't want it in housing, we shouldn't want it in financial services, or in any area where we have to transact and pay for something. So I think that's a slightly separate thing, which is across our economy, we should always be making sure that the regulation makes it impossible for a firm to harm a customer. And when customers are proven to be harmed, then there should be redress, and that firm should either fix its product or it should be put out of business. And I think that is irrelevant of which sector. The final point I just want to say on this is that we've talked a lot about, or we talked a little bit about kind of competition and the market, you know, kind of Jonathan talked about the market being the kind of key. And where I think it's really important is to recognise that sometimes a firm's market for a particular innovation or solution is too small to make the business case for that firm to act. And so sometimes we have to make the market, and that's where social policy comes in. So, for example, thinking around the closing down or withdrawing of bank branches in rural areas particularly. And going back to the point around collaboration with credit unions, you know, for years we've been encouraging banks to think about shared premises with shared facilities for multiple banks. And for years they said that they couldn't because of anti-competition law. And then in the last 2 years, they've realised that anti-competition law doesn't stop them doing that at all, and also that they had to solve the problem of having to withdraw from bank branches, and so they've started to open shared spaces, and there's nothing to stop them opening shared spaces with credit unions or other providers of financial services. So I do think that there's an issue here around recognising when the market is too small, but there is a need for particular products and services in particular areas, either geographically or thematic, and that sometimes we need to work together collaboratively to create the market. And although the payment systems regulator has been heavily criticised for not being particularly proactive, I think one area that they have really done some interesting work is creating a collaborative space, particularly the Payment Strategy Forum, which is what led to Request to Pay, for example. So I think there is something around understanding when the market isn't big enough to drive innovation and to drive solutions, but solutions are needed, and how we then, as a social policy approach, create the market through collaboration.
Yeah, thank you. I'm just looking at the time and we're just a minute over. So what we'll do is we'll take these questions and we'll send it to the experts. And if you guys are happy to answer them, we'll post them on the website so everybody gets an answer to these questions. So what I'll do is I will just summarize and close for today. You know, already before the COVID crisis, we were seeing change in consumer behavior. We were seeing changes in regulation with open banking, open finance on the horizon, technology changes. More importantly, consumer expectation changes, as some of you were mentioning, and what we're seeing is an acceleration of that. And what you guys were alluding to were that this requires a little bit going further, being a little bit bolder, taking change and taking it further, being open about that change, being more collaborative within the industry to deliver solution. More importantly, being customer focused, what we heard over and over again. And I think that is key for the bold financial future that we're looking for. Yes, competition is going to play a part. Yes, we've heard that there are challenges with companies with resources, companies with ideas, companies that are customer focused. But there is a way and a model where we can work together. Banks, credit unions could potentially work together as well, as we just heard. So with that, I think where we are today is nobody knows what's going to happen over the next 12 to 18 months. But what we can do is position ourselves for the change that needs to happen, position ourselves with the open conversation, honest conversation, with the customer at heart, and try to make a better financial future. So with that, thank you very much for joining. The comments will, there'll be a recording available on the website. We'll also make the answers of the questions that we weren't able to get to on the website as well. Thank you for joining. Hope you join us soon. All right, guys.